Welcome back to the Post Pete podcast. We are on episode 13, and today we have a special guest, and we're going to be talking about all things car finance and car funding.
Hi guys. So if you ever wondered really what happens behind the scenes when you're organising finance, particularly for performance cars, I guess this episode's for you. Today we're joined by Mark from Magnitude Finance. Thanks, Mark, for coming on the pod this week. He recently helped me secure funding for my M5, and it was great to just have his insights and understand the various different mechanics on how different funding models could lend themselves well to certain types of vehicles. So thanks, Mark, for joining us today. I guess I'll hand over to you. If you could give us a bit of an introduction about yourself and your world and your experience, that'd be great. And then we can get into it.
Yep, absolutely. Well, thank you very much, both of you. And so Mark Kelly from Magnitude Finance. So we're a finance broker. We're not the actual lender, but that means we've got a really wide breadth of services we can offer, which I'm sure we will go through. My experience has been almost both sides of the desk. So I've spent approaching a couple of decades on the dealer side, so using the finance systems I'm now on the other side of to provide quotes and get people accepted and things like that. I've then more recently been just on the finance side, particularly specialising in, I guess the more unusual things. Yes, I can help someone finance their family car or motorbike, but predominantly the supercars, classics, specialist vehicles through the slightly more unusual funders that a lot of people may not have heard of, not just your vanilla, Lloyds Bank or Santander kind of funders.
That's great. So let's start with why finance? Why finance? How do you see the market? And I guess why do people in your world finance versus potentially bank loan or paying cash?
Yeah, good question. I think there's probably different, almost strata. There's different reasons you might finance depending on, maybe your position in life. So I can't remember if I've taken at least part of this alliteration from something I read a while ago, but I think of it as the first level is afford. So the classic reason for someone having a PCP would be its affordability. You're paying a monthly payment rather than writing out a big check. And by getting a monthly payment, which is manageable, you can then have a newer car that is going to have lower running costs. So that's where PCP started about 40 years ago. So that's the afford level, which I guess we can all think of as maybe our first few cars and maybe the family car.
I was going to say on that note as well, that was how I got into it, because I think my first actual car, my first proper car was a Ford Fiesta Zetec S, and I turned 18 and I went straight to the Ford dealer in my local town and put a deposit down and funded it. And I think my funding at the time was about £125 a month, which for me back then was a hell of a lot of money. But it was a lot newer than, say, an alternative car that I could afford. It was the right spec. And I just remember thinking, wow, it's only costing me £125 a month. I can afford that.
Yeah,
so,
absolutely.
And I remember that. And that was what, 25 years ago now. And it was still probably one of the best days of my life, actually going in, buying a car, a relatively new car, and driving it out and having something like that. So it enabled me to get into something a lot newer than perhaps I would have been able to afford if I put my own money into it.
Absolutely. Yeah. So that's the first level. The next level is what I guess I think of as access, or in some ways maybe aspire. And I wonder that the three of us are probably in, and most listeners are probably in that section, where the everyday car, maybe a couple of everyday cars, one for a spouse, etc., they're kind of taken care of nice and easily. But having, whether it's a PCP or maybe moving into lease purchase on something a bit more expensive, a bit more exotic, a bit more unusual, means that we might relatively straightforwardly be able to pay £600, £1,000 a month with a bit of deposit. But do we want to go and write a cheque for £65,000 for something? Probably not.
Talk about the difference, just for listeners, because even I'm not 100% clued up on it, is that you've got obviously HP, which is typically you pay back the total value of the asset that you're funding over a certain period of time. Then you've got PCP, and you mentioned lease purchase as well. What are those different products? What are those vehicles? As in, What's the
Yeah.
difference between that and, say, traditional finance, in the sense that you own the asset at the end of it, at the end of the agreement?
Yep. So with all of those, you would own the asset at the very end if you've paid everything. Big difference is hire purchase, as you rightly say, you're paying the full car off because you're just taking the amount of money you owe, chopping it up equally over however many months, 36, 48, whatever. A PCP, you are leaving a big chunk to the end. You might leave a third of it to the end, but you don't have to pay that. You can give the car back if you want, you can walk away, you can part exchange it, and then the car hopefully will have a value that's going to cover that final payment. Lease purchase is virtually the same thing. So you're leaving a chunk to the end, you can part exchange it. The only difference really is with PCP, you could just give the car back and walk away. With lease purchase, you can't just give it back. So you're effectively taking the residual value risk, which is why, although we don't recommend, we're not IFAs, we're just a finance broker, lease purchase is really only logical for a more specialist car, something where the value is less likely to be dropping as quickly because you're taking that risk. And of course, in the sector we're talking about, whether it's this aspirational sector or even the kind of third sector, the higher one I'll get to in a sec, then there are cars that are barely depreciating or indeed appreciating.
Yeah, I mean,
In
I,
which
I look at that with the say Carrera T, like we've spoken about it on a previous episode, and I was, I think I had that car from a value perspective. I barely lost any money. It was almost like a rental agreement for the 18-month period that I had it for. And even now, fast forward, coming up to 2 years after I got rid of it, the value of what I would have sold it for is they've pretty much stayed flat. They've not depreciated, they've not appreciated, but the value of that car now, if I look at the market, is pretty much I can buy back in similar age car for the same price I would have sold it for 2 years ago. So they've saved. So I'd imagine there's certain types of car, I guess, that typically lend themselves really well to that type of model, right?
Yes, and with lease purchase, the art, I guess, from the client's perspective, because we're very much in a position where we can show you the figures, we can explain how it works, but the decision has to be made by the client. Yeah, the art of lease purchase is not to get carried away and try and have a massive payment at the end, unless it's something you're pretty sure is static or appreciating because you're taking the risk.
Is that
But
lease
you
purchase
mentioned,
also?
sorry,
Is it sometimes called HP plus balloon, or is that
yeah,
something different?
no, you're absolutely right. I suppose lease purchase is the slightly more technical term, but you're right. Loads of my colleagues will call it HP plus balloon. Funnily enough, our internal system actually says HP plus RV, which is describing it. So exactly the same thing. Yeah.
Okay. Okay. So it's kind of like a PCP, but with slightly different rules and not
Yes.
the ability to just hand the car back.
Yeah, and the benefit for a lot of people with lease purchase will be that because there isn't that handback option, then the finance company, if you think of it cynically, has a little less skin in the game almost because it's your responsibility.
Yeah,
So
the liability moves, right? So
exactly. They still have a fair amount, and there are still the Consumer Credit Act reasons they will want it to be a sensible residual value. But on a PCP, after 4 years, most systems might say, "Oh, the car will be worth 35 or 45% of its original value," which might be about right.
so
But
I've
on a
got.
lease,
Oh, sorry. Go on.
well, I was going to say on a lease purchase, within reason, you and the finance company can set that balloon relatively high. So there'll be some cars where after 4 or 5 years they might put an 80% balloon because they're pretty sure it's going up. There will be many cars where after 4 or 5 years your balloon or residual value will be 60%. As a result, because you're leaving such a chunk to the end, it's that aspire thing or access thing, you have a much lower monthly payment than you would do otherwise because you're
Gotcha.
leaving a chunk to the end.
So when it comes to liability, then on the PCP option, do you often see many people giving the car back? Because I've had handfuls of PCP agreements across lots of different cars I've had, and typically I'd only keep them for 18 months to 2 years as an average, and so I never really get to the end of that agreement and almost part exchange halfway through the agreement. So, do you find many of your customers end up taking it right to the end and then almost returning the vehicle because they just don't want the hassle of selling it, or is that quite in certain quite rare cases?
It's probably fairly rare overall, partly because a lot of people will do what you do and change early. I think, although these figures might be a few years old, I remember, I think it was BMW, the average finance agreement was 41-month duration, but clients changed at 27 months on average. So they were changing far earlier than the end. So the guaranteed aspect, ironically, was irrelevant. However, there will be some cars or brands where you almost need to give it back. If there's been a particular drop in a vehicle, maybe when a replacement's come out, you might find some of the previous generation drop in value enough that actually you almost need to wait to the end because you're in a chunk of negative equity.
Yeah.
We saw this in, I think, 2018, from memory, with Range Rover Sport. We
Yeah.
come out, and one day almost, people were coming in, and I'd say, "Oh, you've got a Range Rover Sport. You'll probably have £5,000 or £6,000 equity. Brilliant. Take a seat." There's obviously a bit more science to it. And almost a few months later, people were coming in, and it was, yeah, 3, 4, £5,000 the wrong way. There's a few options, but you might want to wait 6 months. So it will take into account certain circumstances.
So I've had a
Okay.
weird experience with some funding around that PCP where this was a couple of years ago, to be fair, where I had a PCP agreement against a vehicle and rang the lender, and the lender basically said, if you let so I was in the final year of it, believe it or not. It's very rare. I was in the final year. So I rang them for some advice, and I said, look, I'm coming up to the end. What actually happens if I don't sell or part exchange or get rid of the vehicle in time? And they basically said, and I don't know if this is true, this is good advice or what, but I was told on this call, there's a very well-known, very large lender, that they would take the car to auction. This was their process. If I return the vehicle, to your point, they would take the car to auction. They would auction the car off, and then if there was a gap of a value, I was liable for that gap. So I was like, I don't like the sound of that. So I don't. Is that? Do they do that? Is that something you see when cars get returned in that, or is that just to make sure they're covered for the full guaranteed feature? Because I thought if it had a guaranteed feature value, that's guaranteed, right? I thought even if the market dips, that's their problem, not my problem. But it was made out that I had to plug that gap, which I thought was a bit strange.
There's a few bits to unpack there. So yes, they go to auction. Generally, they will just the auction chap or lady driver will come and collect off your driveway, do an assessment, take it away. So yeah, absolutely. The only things, if it's a true PCP, the only things you would be liable for would be damage over and above wear and tear, hence the lady or gent doing their assessment, and mileage, excess mileage above what the mileage allowance on the agreement was. Some brands work with conditional sale PCPs, which have slightly different terms, and some will put terms in to try and so it will be different between different finance companies. There will be some where they will try and get back some of the loss, but yeah, generally they don't enforce some of the terms like that anyway. But I'm guessing there was a good chance it was a conditional sale agreement rather than technically a full PCP. Very subtle differences, but that's one of them, I guess.
Gotcha.
Okay, let's talk about the third. I think you talked about three. We did two, and then Jack
So you've got
sidetracked us a bit.
Afford initially, then Aspire or Access, which is kind of where we are, and then above that, I guess the tier we'd all love to be in is where you're almost adding to a collection. And yes, this might be the vastly more expensive car, but bearing in mind the question is why would you want finance? So if someone is a multi-millionaire and has got 25 cars, well, actually, if there is a £2 million car that is clearly going up in value, it's probably better use of their cash to finance that, pay a sensible rate of interest, and do something else with their £2 million. At the same time as their £2 million could be, in their business or whatever, their finance bit is also appreciating because that car is going up. So finance is a way of adding to an appreciating collection. And we see, I won't say we see loads of clients like that. By definition, there are never loads of people at the top of any pyramid, are there? But there are a fair number of people with a significant number of cars. We're talking, more than 20 cars. And it's relatively rare for a lot of those collections to be cash owned. The other thing, vaguely interesting on that sector, is the ability to take money out.
Mm.
So something we will facilitate is equity release in cars. And if, for example, if you've got an F40 that you've had a few years, it's probably quadrupled in value, hasn't it, depending how long you've had it. Well, you could easily take £1 million or £2 million out, use my example, put that to use somewhere else, and the car's probably still going up in value, isn't it? So
Mm.
there are very good reasons why it can be usable and useful, rather, even in that sector where you might think, why is a billionaire putting a car on finance? Probably because he can do something better with the money that he would otherwise write a check for.
Okay, cool. And how do people typically get in contact with you at the moment, Mark? How does that work? Is it a case of some of the work that comes into you comes by people putting in a request on the Magnitude website and then getting assigned to yourself? I guess you also have like ongoing direct contacts with clients that you've built over the years. How does that look?
Yeah, so I guess there's three ways really. You're absolutely right. There is the website, and anyone searching for us, or for me, for example, will be able to jump on there and see my details, contact me, or actually do a quote for themselves in the early stages. I say that because if it's something more specialist, the residuals would be more specialist and a bit more manual, which is why someone like me would get involved. Um, but the other ways, no pressure here. Referrals is a big thing. Hopefully, when something goes fairly well in the process, whoever has had that experience is going to remember. So down the
Mm.
pub, Pizza Express, in the office, whatever, they're in the shared workspace. They're going to let people know. Repeat business is a big part of it. Someone coming back after, yeah, hopefully nice and quick, like we were saying with your M5, etc. Um, and then dealers, because we will have dealers who might be advertising 12.9%, and they've got someone that says, I can probably get something different to that, maybe a bit lower. Well, they could potentially recommend me. If they're a friend of mine or a dealer that's used us before, they could say, well, maybe try them. At least it's a friendly face, a friendly company they've got some idea of, rather than someone just wandering off doing their own thing totally. So there's a few different channels through which we get our inquiries, but probably the most important are the repeat and referral, because they know what we can do and they have a bit of an idea of what we need as well, which always makes conversations a bit easier, because some of the finance companies, it does sometimes feel like they need a blood sample to go with all the other information they ask
Yeah.
for, and it's a bit better second time round.
And I guess that with you being like an independent company, you're generally not offering your traditional PCP, and most of the stuff that you do is either hire purchase or that HP plus balloon that we were talking about, rather than the guaranteed value stuff.
Correct. Yeah, we can do PCP. We can do the whole gamut, but the area I specialise in and the nature of cars I'm specialising in means it is predominantly lease purchase, or as you say, HP plus balloon. A lot of people don't bother with HP in this sector
Yeah,
because of the nature of the vehicle, and that the use of finance, as we said, is largely about making use of their cash somewhere else. They'll just want to keep things to a minimum in terms of
yeah,
monthlies because their
yeah.
money's elsewhere making more for them. So HP is probably 5% of what we do, if that.
And since
Or
the interest rates have gone up, do you see that it is still the case that people are able to make their money work harder elsewhere than it is at higher interest rates like 7, 8, 9, 10%? You've got to be doing pretty well on your money to be making 10% a year guaranteed these days, right?
Yeah, I guess there's a couple of parts to it, because there's the very simple sort of interest rate arbitrage, but then interest is going to be one imagines going up similarly wherever. So
Mm.
if you're looking at, commercial property and you were thinking of putting your money into that or wherever, everything's going to have gone up.
Yeah.
But broadly, I think the textbook explanation would be if you're putting money into your business, whether it's, buying stock or expanding it or whatever it might be,
Mm.
should hopefully see a better return than just putting it into at best static, on some cars, depreciating assets,
Yeah.
partly because you're building value, aren't you, in your business? That's what the textbook would say. I'm
Yeah.
not sure everyone goes and thinks, oh, how can I spend that £60,000 on business? But the
Yeah.
logic kind of still stands. I'm sure there will be a ceiling, but I think when interest rates get that high, I think everything is pressured, isn't it? Not
Mm.
just specialist
Mm.
cars.
Mm.
But yeah, it is a more luxury section of the industry, isn't it? So when things get tighter, this is the sector to be hit a little bit quicker. Yeah. So I noticed things as soon as the sort of Middle East conflict hit, it felt like there was more reverberation in my division than in the more mainstream division dealing with your franchise dealers and the more everyday brands, for example.
But if you look back maybe over the last 5 or 6 years, we've had some really good times in this sector, right? You'd imagine that the sort of specialist funding has gone a bit wild. And maybe that, you mentioned the kind of the different tier, there's those 3 tiers in summary, kind of summarize the different
Yeah.
categories, right, of the types of funding that you typically see. It might even be that top tier where you're looking at almost, those big car collections where people are trying to free up cash. That's probably going to be, that will continue to grow, I'd imagine. It's the kind of the middle section where people are trying to fund, nicer family cars or sports cars, perhaps, that are probably going to get
Yeah.
the bigger. And that's probably the bread and butter of the business. I'd imagine that's probably the most lucrative, but equally the stuff that generates the most revenue. Whereas the stuff at the bottom is more run rate, where you'd have to do 10 of those Ford Fiesta deals for the equivalent of one, maybe in the middle. And equally, those ones at the top will just continue to keep going. So it's probably where I sit in the market. It's probably going to get. It's always the way. You're always going to
Yeah,
get
I think you're
the
right.
biggest hit.
That middle
Yeah.
market is always whatever you're doing. That's always the
Mm.
most competitive, isn't it? Because
Yeah.
the top end, within reason, is always going to be the top end. And an F40 is probably going to appreciate for the next 20 years, isn't it? I'm sure in 30, 40 years, people will be bored of them by then, and they'll be the next thing. But that's always going to go up and feel safe, doesn't it? And everyone's always going to need a family car or two. Yes, you might downsize a bit, but the middle sector, yeah, it's always the biggest risk, isn't it? Does Seiko or Timex worry too much about people needing their next watch? Probably not, because they're just going to buy, I don't know, a 20, 50, £100 watch. Do Breitling worry about their entry level more than their top end? Yeah, probably. Because if you're going to buy a £150,000 watch, you're going to buy it anyway. It's the £5,000 to £12,000 watches that are going to be the biggest problem for them when markets fluctuate. In the same way as for us, it's probably the £50,000 to £100,000 cars.
Yeah.
That's where things fluctuate the most, because they're the ones that people need the least if things dip very slightly.
And my view on the world is funding more so recently meets my schizophrenic car obsession by just going through cars consistently every 6 to 12 months. So the fact that I'm not putting a huge amount of capital in means that I'm not taking a massive depreciation hit every time we buy and sell a car. Or I probably am in some level, but I'm not probably seeing it like it's my own money in a way, and there's certain things I've been able to get out of because I've leveraged certain funding, and I've got out at a better time than perhaps if I'd left the money in there and stuff like that. So I think if I was for my world, funding vehicles seems to make a lot of sense because I can get in and out of stuff very, very quickly, and I'm less tied down into them, and I don't necessarily need to wait to get the cash out. Whereas in other circumstances, you've got people that will put money in and leave it in there and hope maybe in 10 years' time that the asset's going to be worth more than they paid for it, or worse, or even in most cases they've almost sweated the asset, so it's almost paid itself off. So even though they've probably lost a lot of the money because the depreciation of the vehicle has gone down, it doesn't feel like it's a loss because they've got 10 years worth of usage out of it, and if they'd financed that thing, they would have been paying a huge amount of monthly interest and a larger
Yeah, that's
repayment every
probably
month.
more like what I'm like versus
Mm.
you. I tend to buy and keep cars for a longer period, and therefore I've always struggled a little bit with the concept of, oh, that's going to cost me X amount in interest. I could just pay for it with cash and then not worry about it. But I do tend to keep my cars longer. That being said, I think one thing that would be really interesting to highlight upon here is many people will look at the monthlies of new cars, which are typically between 300 and 700 pounds a month at the moment. I would say probably for a family car that's relatively new, that's going to be depreciating. And I think the thing that people probably don't know or haven't appreciated is that through companies like yours, you can actually get access to some really cool cars at the cost of some really boring, mundane cars, just because
Yeah,
of the fact that some are new, they're depreciating heavily, and you're really a lot of the time paying for that depreciation. So it would be cool to
absolutely.
give a couple of examples if you have any of, like, you know, you can fund X car for the same amount or similar amount as you'd be able to fund something that's, very mundane.
Yeah, well, I think as a almost an explanation of how lease purchase versus PCP works, although there's a tiny bit more to it because you will pay interest on the balloon. If you think of a £30,000 standard PCP car, the finance company might say at the end of it that's worth £10,000 after
Yeah.
4 years, probably not too far off. So you're effectively funding the £20,000 gap.
Yeah.
Well, if so that's 30,000 funding 20, simplistically. Well, if you find something more interesting that's £50,000 but is going to hold its value nicely, barely drop, then you might leave to the end 35,000 pounds of that 50.
Hmm.
So simplistically, as I say, you pay a bit of money on interest on the balloon, you're still funding 15 to 20,000 pounds. That difference between the list price and that balloon at the end. So yeah, you can go from something very mundane, fun, family-ish to something pretty exciting and different, which is that whole thing about the kind of access that lease purchase particularly can give you. But interestingly, just back to Jack's point about swapping cars early, it working quite well, that's very effective if you're buying them well. It's quite easy to jump at the wrong car, whether it's the wrong color combination or just the wrong model, or the manual not the auto, or vice versa. And I know some of our conversations about a few of your cars, you've done what I would say is absolutely the right thing. Quite a bit of research, buy the right car, and you will find it fairly sensible to change. Although there isn't an exact sweet spot, there is something in that kind of 6 to 12 month thing where a car won't have changed its value wildly. If you've got an interesting 6 to 12 year old car, then if I said in 9 months, oh, it's an interesting 6 and 9 month to 12 year and 9 month old car, it's basically the same thing, isn't it? And if it's got an extra 5,000 miles on a 40,000 mile car, it's not much, which is why a lot of the right cars won't depreciate that massively, because you're looking at a car that's only a little bit older, a little bit higher mileage, and you're going to look at it very differently. The next person's still going to think, oh, I can access that car I've wanted for, since I was 12 and saw it on the cover of Top Gear magazine or whatever it might be, for only this a month, which is why the right cars will hold their value, or at least not depreciate too quickly, where lease purchase works well.
I guess where's because we've spoken about lots of different cars and lots of different models right in the background, Mark, right? And you know, I was even toying with the idea of getting back into an E92, and there must be a category or a value of a vehicle where it almost makes it a bit harder to sort of justify maybe the traditional financing because of the value of the age, perhaps. So is there an area that isn't worth exploring, or have you got some advice in terms of, if take an E90 for example, and we wanted to fund that, because you're almost on the cusp of potentially bank loan interest then at that point.
Yeah.
And it's, again, it all goes back to risk, I'd imagine, and the interest rate you want to pay. So it might be slightly cheaper to take a bank loan, but then you're taking on 100% of the risk yourself. So, there's probably pros and cons to it, but there must be maybe a sweet spot or a depreciation curve that perhaps is a better time to get in than perhaps, like James touched on, going out and buying a brand new car from a dealer and paying top interest and losing 20% the second you drive it out the forecourt.
Yeah, I think there's a couple of bits there. So first of all, the kind of a figure at which maybe it switches to being actually you may as well get a personal loan. If we're looking at something specialist, so I'm thinking, specialist is probably more than 5 years old. It's probably £100,000 car new, and we're now looking at it being maybe not too much under it, or maybe it's accessible at 50 or 60, but it's still held its value quite well if it's 6, 8, 10 years old. In that kind of context of the word specialist, I think if the car's under about 25 or 30,000, for me, it feels like you almost may as well get a personal loan. If you've got a £25,000, albeit interesting specialist 15-year-old BMW, the residual value the finance company will put on it at the end won't be as high a proportion as if it was a 60 or 80,000 pound car. Partly because it is a slightly lower value asset. They're going to think maybe someone won't treasure it in quite the same way. It's not going to be making them as much money, so they're taking proportionally a greater risk. So I think, although it's not an exact line in the sand, if I was looking at something under 30, personally, I'd probably be considering a personal loan and doing a spreadsheet, despite doing this job for a living. Anything over 25 to 30, for me, I'd want a bit of the extra reassurance you've got with a vehicle finance agreement and access to lease purchase, where you can really maximise your kind of buying power by having a sensibly judged but relatively high value at the end. Good example is your BMW in that kind of instance. Lovely car, nice sensible residual at the end, and that car is going to be a good value car for a while, isn't it? It's not going to be plummeting, far from it.
Yeah, I mean, I kind of expected it to plummet, to be honest, because it's an M5. The cost of running, the fact that I don't think it will ever become real specialist. Maybe in 30, 40 years' time, and there's very, very few of them on the road. But that's not what they're there really. Well, that wasn't the intention for this car. But and I understand what you're saying. Yeah, if you buy at the right price and the right level as well, so not just get a good value purchase, but also making sure it's within that zone that you mentioned, then I'd imagine that it takes a lot of the risk out, and it gives you a bit more flexibility than perhaps putting your own money in and just watching an asset depreciate over the next 4 or 5 years. But again, if
you were saying about the depreciation curve, I think that if you're looking at something interesting like an M5, then you probably want 4 years old plus, where it's taken its initial hit. Yes, it's still got highish running costs, but actually, for a lot of people in that aspirational category, the running costs are manageable, but the car is now half or 2/3 of what it was new. But the curve is much, much flatter for the next 10 years compared to those first few. If it's something, stratospheric, the new Ferrari, Lamborghini, something limited, then from day one it could be appreciating clearly. But with what become the 50 to £100,000 specialist cars, so when they're new, probably 100 to £200,000 cars, you probably want the 4 year plus, I would say, that kind of era.
So given the fact you've got the inside scoop from the lenders themselves, is there, I suppose there's not necessarily a brand, but is there a certain type of vehicle that funds particularly well in those different models, that almost the lenders like because they're relatively low risk, for example? So, they're willing to put maybe a slightly larger balloon on it because they see an upside in the market, or, is there a sweet spot from a lending that you're seeing a trend around, or is it just a case-by-case basis depending on the age, mileage and type of vehicle? Is there some insight?
The specifics will always be on a case by case, but in terms of trends, I suppose the only slight challenge with a trend is, it's like finding that beach that no one knows about, isn't it? Well, as soon as you tell a few people, suddenly everyone knows about it. So I think if I was sitting here a year ago, I'd have probably said, and again, I should say, I don't work for any of these brands, the Urus was absolutely bulletproof in terms of residuals. It was really doing well. Whereas in the last 6 to 12 months, certainly 6 months, that has suffered a bit more depreciation. But
Wow, I wouldn't have. So I wouldn't have thought. I just again not spending any time with them, not understanding the product at all. But I wouldn't have thought from the outside that would have been a great, because it's a SUV. It's not your manual. It's not analog. It's not what these kind of, I guess, collectors are really talking about at the moment. So I would have thought that would have been a slightly risky vehicle to fund from the outset, because they've got a huge tag price with them. They're they're big, heavy cars. They're very digital, very electronic, right? So I don't know. Maybe was it because there was a big following for them, or were they quite difficult to access at the start?
Pure demand. Pure demand at the time, and for, I mean, it's been out like 6 years or something, isn't it? So pure demand, which is why it's now slightly tailed off, because a bit like the beach thing, everyone's jumped on that bandwagon. Loads of people have had them, and they're now on the market, and it's kind of on to the next thing. You've got a new generation of it coming out, etc. So that's kind of a good example of a car that was, really good, purely because even though it's not a collector's car, it's a very nice high level of family everyday car. Someone's great excuse to get a Lamborghini because they can put the child seats in the back, etc. But exactly, what's not to love?
Yeah.
But actually, because of that, there were enough people to be able to access £200,000 to £300,000, and enough people behind them wanting to do the same, or maybe access 2 to 250, that 3 years down the line they were still worth 70-80% of what they were. Now that has tailed off a bit. If we're talking now, I guess traditionally, probably for the last 20 years, people look at a Porsche 911, whatever model, pretty much. I'm sure there's lots of purists will, chase me for saying that and say, well, actually, the headlights on that mean it won't hold its value as long, this, that, and the other. But realistically,
the purists would say it's got to be a 991.1 GTS in Carmine Red, surely.
I'm definitely of the 996, 997 camp now, I think. But yeah, 991.
Yeah,
they're just pretty looking cars, aren't they? So you can imagine, and there's a massive following for them, and
exactly.
a lot of them have now depreciated, and they're almost at the bottom of their depreciation curve. So even from a lender's standpoint, they're quite low risk, because even if they, don't depreciate much further, you're going to get out what you put in, I'd imagine, right? So
for a lot or close to, and I think it's always going to be about doing the research, as I said about yourself and your cars and you were doing. But if you were looking for the big picture stuff, then Lamborghini, Porsche are probably some of the safest. But then, funnily enough, just to vaguely upset you again, another SUV, G63s hold their value pretty well.
Do they really?
And have done for quite a few years. Maybe not from brand new, but after it's maybe taken a little bit of a hit, they will hold their value between sort of 2 and 8 years old pretty well.
Could you give us like a really rough monthly figure on something like that then? Just like, you don't need to, guarantee anything, but are we talking like you could get into a 4-year-old G63 for like £600 a month, which is the same as getting like a 320D touring from a dealer or something?
You'd probably find the logic wouldn't be too far off, probably a touch more than that. I'm thinking you're probably looking at £125,000 for a nice 4-year-old, maybe highish mileage car. But again, if you're looking at £125,000, you could probably leave 80 of that down the road to the end. So you're effectively funding the 40 a bit over the 4 years. Put in a bit of deposit, and you're going to be under £1,000 a month, £900 a month for a lot of car. £125,000 car now, £200,000 or whatever new. Good example of where it works. But I think that if you asked anyone in this sort of industry for an easy answer, it's probably Porsche, Lamborghini, and most Ferraris. That's probably the easiest answer.
Yeah. And is there
I was really surprised when I was looking at maybe funding my one. The monthlies on it, I just kept thinking like, well, I can't even get like a nice 3 Series touring for that money. Yet this car's maybe double the value sticker price, but it's the
Yeah.
same amount per month. And I think it's important to break that. For if people want to get into that, don't always assume that the higher sticker price means that it's going to cost loads more money a month. Because I was really surprised when I looked at the figures, and I was just like, wow,
Yeah.
40 grand car would cost the same, and this is a 65 grand car.
Yeah. The
So
beauty of the residual value at the end, as long as it's sensible. And funnily enough, when I was retailer side, I almost had the conversation with people the other way around of they'd be thinking, oh, I can't quite afford that monthly. I'll look at a cheaper car. That won't always work, because if the residual is that much lower, it's not much different. So yeah, exactly the same thing, but other way around.
just
So
one
yeah,
more question before Jack will inevitably want to jump in. If say I take that product with you though, and it's not a PCP, and it is this
yeah,
HP plus balloon. When I get if I get to the end of the agreement, because I tend to keep my cars a bit longer, but then the car is worth, whoever decides what it's worth, they decide that it's worth less than that balloon. That's on me to fund that shortfall, is it? So my balloon
yeah,
is say 40, but I'm only getting offers of 35. I'm
yeah.
5k in the hole at that point.
Yeah, because simplistically, because there is no option to give the vehicle back,
Yeah,
then simplistically you owe them, I think you said £40,000.
yeah,
Yeah, if you can only get 35 by selling it to a dealer or privately, or online buying site, whatever,
mm,
then yeah, you're going to have to take the other five from somewhere to give them their 40.
yeah,
That said, especially as you said, you keep your cars a while, we could have a chat about refinancing it. If you thought,
yeah,
you know what, yes, it's worth a bit less than the balloon, but I've absolutely loved it. Well, we can just
yeah,
refinance the 40 over another 2 or 3 years,
yeah,
which a lot of people do. The interesting thing I find about lease purchase in this sort of specialist high value sector is it's very rare people are in the middle. They're either changing things 6, 12, 18 months, or yeah, we've got one of each here, or refinancing at the end, or,
yeah.
which is, yeah, it's quite nice really, because I guess there's one sector is getting to have a go in everything they've ever wanted, and then the other one has found the right car.
I'm
Yeah,
like a kid in a sweet shop when it comes to that sort of stuff. For sure, I just want to try it all and get a
Yeah,
bit bored, a bit easy as well. That's really interesting. The other thing I learned from you the other day, which I didn't know this, was that you have a few lenders that will help fund from the private market, because I was always under the assumption that even if I wanted to buy James's car, for example, I would need to pay a dealer transaction fee to get you to fund the vehicle from James so I could buy the car from him. But that's not necessarily the case now. So
correct.
you do have lenders that you work with that can almost, if I wanted to buy it directly from James, I wouldn't have to involve a third party dealer to transact.
Correct.
That's
Yeah,
really
and
interesting.
it's interesting. You're right using the phrase, and I'm sure plenty of people do it, but the kind of involving a dealer and a transaction fee just to get it financed
Mm,
does potentially create some interesting challenges, because not that it's your problem, but that dealer is totally liable for that car. If it goes wrong in 6 weeks or 3 weeks or whatever, they are liable for it. Might have to buy it back, and
mm,
just take it back off you and give you your money back. So they're, if they charge a minimal admin fee to try and help someone, they're potentially opening themselves up to a bit of a risk. But to save all that kind of palaver, we can, via a number of finance companies, yeah, fully facilitate a private sale. Generally on cars above £50,000, we can do a few below it, but generally above 50,000. So we're talking again about proper specialist, unusual, proper lovely bits of kit. The lender will need quite a bit of information, unsurprisingly. There's going to be contracts for the seller to sign, invoices for them to sign. They'll want certain checks, service history checks done on it. There'll be asset inspections. But yeah, we can facilitate that. And we've had them, each end of the country, where we're dealing with the vendor and the seller, get everything sorted, and then someone goes and collects or gets the car trucked down.
What about collecting cars, or a website similar to that? Because that's where I bought my car from, and it kind of ends up turning out to be a private sale at that point. How would that
Yeah.
work?
Yeah, so my understanding, I've not actually dealt with them, is that collecting cars is connecting people.
Yeah.
I don't think, have any contractual part of any
No.
agreement.
No.
They are just saying,
They do the
Bob,
marketing basically.
here's Dave. Yeah, exactly. They're a matchmaking service for car buyers and sellers, aren't they? And take a fee, I think, off both ends probably. If you found a
Just off the buyer actually. But yeah.
Oh, is it? Okay.
Yeah.
Um, if you found a car on there, yeah, you could, or anyone else could, give us a buzz, give me a call, email, and say, right, found this car, looking to finance it, and I can do the quotes, look after both yourself and the vendor. Yeah, get it sorted
Okay.
wherever you found it. So it is, yeah, something a lot of people don't realise we could do. I wasn't actually aware how easy, in inverted commas, they still want a fair bit of detail off you. I wasn't aware how easy it was on this intermediate 50 to a few £100,000 sector to facilitate a private sale. I kind of knew and understood in the classic car world and the proper, £1 million car world,
Mm.
yes, bit different, commercial asset finance funders. But yeah, in this sector, one of my first deals last year was it was a 95 or £100,000 Porsche 911 as a private sale, which was quite a
Mm.
baptism because there was a lot of paperwork, but it actually went pretty smoothly. There was a long list of things to be done, but when they were done, there's your money, there's your car. Job's a good one.
Yeah.
And
Great.
so is there any pitfalls, anything that we need to be aware of, or any advice you could give, consumer advice, I guess, in terms of things to look for, things to avoid, based on your kind of experience with the
On the
with the
private
market?
sale thing or the finance thing generally?
Finance in
The-
general, really, yeah. Anything to avoid, or any pitfalls that you're aware of in the industry that perhaps people should pay attention to?
Um, I think making sure you fully understand the product, because yeah, there have been people that haven't necessarily realised that they're signing lease purchase and thought it was a PCP. Um, I think making sure that you're sensible with yourself about the car you're getting and the value you're putting on it at the end, because it's not entirely up to you, but there will be cars where the funder will allow you to put a pretty high value, but you need to be well aware that is your risk. Don't get too carried away. There is a balance between your monthly payment and that risk you're taking at the end. Um, I think that's probably the biggest thing, is just understanding, doing your research. It's the boring answer, don't get me wrong, but I think when you get to this kind of thing, that's what you want. You want an element of boring because you've got 99% of the purchase, and the research and the desire for the car is utterly irrational, isn't it?
Well,
Make sure that
we
that
need I
rationale is in
need you
there.
in my life, Mark, because the problem is I get a little bit emotional and I get swept away and I get the rose tinted glasses on and I get too emotional. It's an emotional purchase, right? And I almost need someone to slow the deal down to be like, "Hello, have you thought about,
Just make sure you've got a little bit of spreadsheet in there at some
yeah,
stage. It's the not necessarily getting carried away whilst you're in the sweet shop. It's, yeah, take a minute, put it on the spreadsheet, and we will quite often have conversations at that stage with clients. It will be, I've been into a dealer, I absolutely love this on a G63, whatever, but this is the quote I've been given, and we will help them maybe understand the quote they've got, show them something alternative, maybe show them actually lease purchase could work quite well and save you £300 a month or whatever it is. But I think genuine understanding what you're getting in for, because 99% of the time it will be absolutely right, but just making sure you're clear on stuff.
Yeah.
Annual
The biggest.
mileage used to
Yeah.
be the big thing people undersold themselves on and thought,
Mhm.
oh, I'll save £9 a month and take off 1,000 miles a year. But if you do need to give a car back on a PCP, that's the last thing you should have done. Always be honest and understand what you're doing.
The biggest one, from my perspective, is maybe at that in your analogy of the three tiers. In that first tier, it's like I cringe when I see people that maybe don't know loads about cars that just get offered a finance amount from whoever's selling that car that's probably a really horrible financial deal, but they just take it straight away without even checking what it might be elsewhere. And I guess that's where, albeit it might not be the level that you specifically are at, like I would just urge people to not take the first finance offer that they get given them, particularly if that's by the person that's selling it, because that's quite regularly going to be a poorer deal because they know they're in a good situation with you in front of them anyway, and they can say, oh yeah, I can afford £300 a month, let's do it.
Yeah, I think it's the same for a lot of things in life, isn't it? The first time you buy something, whatever it is, you probably haven't done the right level of research, have you? And when you get to this level, yeah, you definitely need to make sure you're doing your research. And yeah, I think it's a good point. Don't take the first offer. Have a little bit of a look at the options.
Mm.
It's very rare, that car probably won't sell in the next 10 minutes, if we're honest.
Yeah, although it feels like it at the time sometimes.
Yes, indeed, especially if the salesperson is convincing enough.
So
Yeah.
I'm gonna switch gears a little bit, and before we end, I want to ask about peak cars, peak affordable sort of classics, and
Yeah,
if maybe we could touch on a few price points in terms of the funding spin on them. Could
yeah.
you give us, your view of what's peak car for you, and maybe even attach a bit of a monthly payment or a category of where you think they might sit?
Yeah, I mean, I was thinking about this sort of thing earlier, unsurprisingly, and there were two kind of categories I suppose I had in terms of monthly was the £500-600 a month, which I think for most people in this sort of aspirational sector is relatively easily affordable. And then I was thinking maybe three times that, 1500, £1,800 a month. So yeah, when we've all had a few more promotions, but it's a level that we can probably think we might get to rather than saying, yeah, for only 12 grand a month, you can get this, which is probably a bit out of most people's reach ever. Um, the cars for me that I think sit best, not necessarily scientifically, but the balance of it works well on funding and they're awesome bits of fun, are things like RS6, potentially E63s, 43s, whichever, M5s, where you can genuinely, I should say, Jaguar XFR, that kind of car, where you can genuinely have something that is quite usable day to day. You don't, have to get to the post office at 112 miles an hour. Um, and they are lovely cars, 35, 40, 50,000 pounds. You can get huge amount of car, sensible value being held in it in another 3 or 4 years, quite easily, sort of £500-600 a month cars. Not quite the other end of the spectrum, but the £1,500 to £1,800 a month. At the moment, although there are two ways of looking at this, as a brand, McLaren looks like quite good value for a lot of their cars. I think they've taken a little bit more of a hit than they might have liked to have done in the last 12 months on a few cars. Some are doing brilliantly, some a bit less so. But that makes some of them very good value at the moment. There's some incredible spec cars out there for 150, £200,000, which are, £300,000 cars new. And it doesn't feel like they're going to continue dropping. Yes, they will slowly, but they're not going to plummet. And it's easy and flippant to say, oh, it's a bargain at 150 to £200,000. But it looks like some of those cars feel like a lot of car, a lot of engineering for the money. And with a vaguely sensible balloon, a bit of deposit, yeah, 1,500, £1,800 a month. I've done a few quotes on some nice ones recently. Yeah.
Wow. Wow. And what would they be like? The 720Ss or
Yeah. Yeah.
760s? Like,
720s,
wow.
765. Yeah. Yeah. There's
A
a
hell
couple
of a
out.
lot of car for your money. They're hypercar territory, right? So it's
Exactly. The word of warning with that, a bit more than your RS6 or M5, is you can't really avoid a fairly big repair bill at some stage.
mm,
You have got hypercar running costs rather than specialist car running costs, and you know whether or not you do it, you can go to a really good, BMW or Audi specialist, can't you? Whether you want to take your £185,000 McLaren to someone non-McLaren, or at least hasn't known the ins and outs of a McLaren for a decade, is probably another matter. So yeah, there's that to consider. But from a finance perspective, and just looking at the cars in the market that I've seen people funding, they look like a lot of car for money at the moment.
Sounds good.
RS6 for £500 a month. That sounds
I've
good.
done a couple of quotes on some nice RS6s recently. Yeah, and they just feel so sensible.
Well, you've got the ultimate job, right? You make dreams happen. I mean, if it wasn't for you, Mark, if we hadn't crossed paths, I don't think that M5 would have really happened. So you kind of connected up the dots and made it reality. So
It is awesome.
Yeah, it's been great working with you. Thanks for coming on the pod today.
Thank you. No, my pleasure. Yeah, it's been good fun.
And where can people get in touch with you, Mark, if they're interested to
so LinkedIn is an easy one. Find me on there, Mark NR Kelly, Magnitude Finance, or you will find me on the Magnitude Finance and DSG, our parent company website. I'm sure we can put a link somewhere as well that will be useful for someone to click on.
Yeah, absolutely. And I'll try and put your email address on screen as well.
Yeah,
well, thanks so much for coming along. I think there was some interesting nuggets there. And as always for me, really interesting to know some real life examples of how much stuff can cost and open up some possibilities to people to hopefully buy their peak car.
Yeah.
So, thanks for coming. Great to talk to you. And we'll be back again with another episode soon.
Excellent.
Have a good afternoon.
My pleasure.
See you guys.
Cheers.
Good afternoon, guys. See you around. Bye-bye.
Bye.